You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts, Uncle Mike TOSAW from St. Charles Wealth Management, along with Mark the Greasy Meatball Sebastian and Andrew the Rock Lobster GIOVINAZZI from OptionPit.com. And now, get ready to hit the Option Block.
All right, everybody. That music means we are back once again to kick off our broadcast week here on the old Options Insider Radio Network. To do it, of course, with episode 1 of your bi-weekly options extravaganza, known far and wide as the Option Block. My name is Mark Longo from theoptionsinsider.com, the home of all your options news and articles and earnings move and move results and season and trade reports and all that cool stuff, as well as links to all of our shows. People hit us up all the time. Hey, I can't find XYZ episode of this show on whatever service it is, Spotify, iTunes, whatever it is. They change all the time. So they always hit us up with that. And the answer to those questions always are, hey, have you checked our website? Because it's all there. Every show, every episode is all there. And B, also our mobile app are the two great ways for you guys to get access to that. So if you're on a platform and for some reason you can't find, maybe you want to go back to episode 35 of Options Bootcamp, and for some reason it's not displaying there, you can always find it on our website and on the mobile app, of course, if you want to join and all the fun throughout the week. Theoptionsinsider.com/secret clubs, where you can go to join live, all the chats, all the Q&As, all the oddities, all that good stuff, and giveaways, and a whole bunch more. And of course, however you listen live after the fact, if you like what you're hearing, make sure you keep rating and reviewing after the fact on all of your podcast platforms of choice. I got a feeling it's going to be a heck of a lot of new people discovering the content again this week. It's one of those weeks. So keep rating and reviewing. It does help all the new folks discover the shows. Of course, if you have questions, and hey, who doesn't in markets like this, hit us up. We do love to hear from all of you folks out there. Going to suspend our usual week kickoff here with the wrestling guessing game for a variety of reasons. First off, we're beaming some people in from far and wide, so I'm not sure if all the audio would make it through. And B, there's some stuff happening today we probably want to sink our teeth into. So we'll suspend it. We'll be back to the wrestlers, don't you worry, next week, barring, some sort of life-altering occurrence out there in the markets again. So let's go out first. Now, he gets their award for beaming in the farthest today, because he's beaming in from out there in the Atlantic. He was supposed to be back by now. We all know, of course, traveling a wee bit dubious these days, and there are delays going far and wide. But you know what? Nothing can stop Uncle Mike from St. Charles Wealth Management from his appointed rounds here on the Option Block today, beaming into us from down there in Bahamas adjacent, sir. Welcome back to the show, sir.
Always a pleasure to be here. You know what? I think that now is a safe time to call a market bottom, because of the fact that even if the Options Insider is canceling the 80s wrestling entrance music game due to market conditions, then that's a sign right there.
That could be one of many. Yes, buy that dip right now, baby. BTFD all day. What's the worst that could happen out there? So Uncle Mike, yes, he gets the award for beaming in pretty far. He's beaming in even farther than our next compatriot, which is another reason why we're not doing the 80s guessing game. He doesn't really know any of these 80s wrestlers. He is the rockingest of lobsters, Mr. Andrew GIOVINAZZI from OptionPit.com, beaming in from his fortress-like compound there on the shores of Maine. You know, Mr. Rock Lobster, if you go out to your window right now and look out over the shores of Maine and then lean a little bit to the south and wave, maybe Uncle Mike will see you.
That would be great if it were real, but I'll give it a try. I'll give it a try just for TOSAW. But right now, if I stuck my hand outside, it just would probably freeze.
Yes. I don't think Uncle Mike has that problem. He has to crank up his air conditioning to 11. So two different extremes out there. Speaking of extremes, the markets are hitting some extremes. So let's get to it. It's time for the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, everybody. Welcome to the trading block. Things are moving so fast. I'm having a hard time keeping everything updated on the fly here. Every time I update them, they move again, another 2 points. But yeah, it's one of those days, listeners. If you recall, you listened to our Volatility Views program on Friday. If you haven't, I encourage you to check it out. Not just because it was an epic dose of the logins, which I think we all needed in our lives. I know a lot of you were excited about. But also because we kind of laid it all out there on the show on Friday. You know, things were looking pretty dicey. We had the once and future Dr. Vix there and present now actually joining us on that. And we all thought, you know, if we saw some of these tensions flare, we're going into the weekend, obviously very skittish. The markets are selling off pretty heavy going into the weekend. And we thought if something really popped off over there on the Russian border with Ukraine, things could get dicey. We didn't quite see that, but we did see an exacerbation of tensions, of course, with the removing of a lot of the diplomats' families from areas around the Ukraine and the embassy, which is never a good sign. Usually a bit of a prelude to something worse happening. So the markets didn't like that. Oddly enough, when we were looking at the overnights last night, most of the major indices are actually up somewhere around 0.5%, which seemed a little bit odd to me. I knew we had the Fed coming this week. We also had that not exactly optimistic news coming out of the Ukrainian situation. So the two of them didn't seem like they were combining for great numbers. And sure enough, fast forward to this morning, and we are seeing now kind of the darkness, even though it does seem like maybe we are bouncing off some of the worst. You know, NASDAQ was off over 4% at one point. Now, as we're kicking off the show, we're seeing Dow off a little over about 2.1%, S&P off about 2.5%, and NASDAQ, again, bouncing off the lows, off only 2.75%. Yeah, it was dark times. Vol Q was over 40 handle at one point this morning. I think it got up to like a 41 and change. Let's see, how high do we get on Vol Q this morning? Yeah, 41.13. And we kicked off the show now. It was back down to a paltry 39. It's only up about almost 14 points. 14 points, listener, from where we were on Friday. So yeah, things are getting a little bit skittish, a little bit dicey. Yeah, I think you could say that. VIX was at 36, then at a 37, then at about a 38.30 when we finally officially kicked off the show. That puts it up about 16.5 points from this time last week. You know, at this rate, we may get the answer to our question of the week very soon. Let's see. We haven't gotten there yet. No, 38.75 was the high. But we asked our question of the week right before showtime, listeners. You guys can go play along over there at Options is the place to go to make your voice heard. But we asked you, hey, when we posted that poll, VIX was at about 36. It had hit a high of 37.81. We asked you, do you think this has more legs this week, or is this kind of just a short-term blip? So which level do you think we're going to hit first? 40 or 30 before the end of the week? Or we gave you an option to get out there, too. We thought we're going to close somewhere between 30 and 40 without hitting either of those. And those that just went live there before showtime. You can get over there at Options. If you don't see it at the top there, just scroll down a little bit. We do tweet out a lot of stuff during the day, in case you haven't noticed. And you'll find it over there. Right now, the hitting 41st is winning with 44.4% of the vote, followed by 33.3% for 30. And this is such strange numbers. And 22.2%. It's all it's all even numbers. 22.2, 33.3, and 44.4. 22.2% saying it's going to close somewhere between 30 and 40 without touching either by the end of the week. But yeah, we're threatening 40 right now, so we could have the answer to this by the end of the day. VVIX coming into showtime. Get ready for this, listeners. Buckle in. 165 Yeah, that's back up to, 2020 pandemic sell-off levels. They're getting pretty close to it. That's up 42 points, 4-2 from this time last week. Things getting frothy? Yeah, I think we could say so. VXX listeners, 2665 when we kicked off the show. Up, this is products that can do nothing but go down. Up 7.35 points from our last show on Thursday. This is my favorite so far. UVXY, listener, this is the product that can do nothing but fade, right? This is the product all of you I know love to fade. When we kicked off the show, it was threatening to break a 10 not too long ago, hovering around a 12 handle. It's at a 21 when we kicked off the show. It was up 8 handles from Thursday's show. Let's give a little bit of that back now on this recovery here, down to about 20 and a half. Still, we're back up to about half of our reverse split level of 40, listeners. This keeps up. We don't need to redo a reverse split. The market will do it for you. That shows how people were loading up on the 10 strike in January. It just shows what a difference a week can make, listeners. We were threatening 10 a week ago. Now here we are blowing through the 20 handle again. And VolQ, like I said, already hit 41. So, man, what a week we got going on here. Let's go around the horn. Since he's beaming in from parts unknown, let's go out to him first. Mr. Uncle Mike, you're kind of our resident permabull here. We missed you on the show recently. We could have used some permabull action towards the latter portion of last week. What's catching your eye and lighting up your tape in these decidedly not permabull markets?
S&P's at 72 points from the low of the day today. So I guess it's about your perspective. And so just as I'm looking at this today, here's what it boils down to. When markets go higher, they have pullback. And there's always going to be some news that could drive the pullback or something, whether it's the Russians, whether it's the Fed, whatever the case may be. But the bottom line is that if you go back to the lows of March of 2020, right when the COVID hit, we were at roughly 2,100. I'd have to go back and look. I was looking at it earlier today, but I'd have to go back and look. We're still double of where we are from March of 2020. So in less than 2 years, the stock market has doubled. Now, of course, that's after a 35% pullback when the COVID news hit initially. But just kind of keep that in perspective. Even after we're down roughly 10% from the all-time highs that we made on, I believe it was the first day of trading this year, and we're still about double of where we were in March of 2020, less than 2 years ago. So that's one thing to keep with perspective of everything. I don't really care about, well, I care very much actually, but in comparison to all the other things that are going on with the Fed, with the Russians, with Bitcoin, which I'm going to rant about in a second, so just be forewarned. The bottom line is that we've had a lot of a bull market since that time frame. When you have big bull markets, you're going to have big pullback. That's just a fact of life. That is an undeniable truth, at least in the 20 or so years that I've been a market participant. Now, what do I think is, besides the fact that we have had such a huge run up to the upside, what's something that's lighting up my tape today? Well, I just want to reiterate it again. Bitcoin sucks. Now, the reason that I don't like it today is because of the fact that I believe, because of the sell-off that we're having, a lot of people are getting into forced selling, kind of like with the meme stocks about a year ago when people had to force their short or close their shorts and deal with some things and create a lot of forced selling. What I believe is happening is that a lot of people are having to sell their S&P stocks to actually cover some of their levered Bitcoin losses. That's my theory on it. And the reason is that, well, reason number one, Bitcoin sucks. But reason number two, a lot of people are thinking, and so just be forewarned, this is going to be a Bitcoin rant. My apologies for this, folks. So if you have young children by you, just maybe cover their ears. I won't use any foul language, but it's still going to sound like some Bitcoin hate speech coming. Just be forewarned. A lot of people say that the U.S. dollar is this horrible thing. The U.S. dollar, since we've been off the gold standard, is just this paper money. This, that, and the other. Now, don't get me wrong. I am a dollar bear for a lot in a lot of ways, but I'm not a dollar doomsday person. Now, what I mean by that is that I'm a dollar bear from the standpoint that the dollar can go down because we have the power to manipulate our currency to do this, that, or the other, whatever the Fed wants to do, quite frankly. But here's the thing. No, we're not on the gold standard anymore. And yes, that money is backed by paper. But you know what standard we are on? We're on the military standard. And I'm not trying to sound bitter and mean towards the rest of the world, but the reality of it is that our bombs, our tanks, our aircraft carriers are much bigger than anyone else's in the world. And because of that, we get to play by our own rules. Once again, I'm not trying to sound like an American elitist by any means, but that's just the simple fact of life, is that we get to play by our own rules. We get to print more money if we want to. We can do whatever we want because of the fact that we have the biggest military in the world, and we're much bigger than everybody else in the sandbox. So because of that, the thought that Bitcoin is going to replace the dollar and Bitcoin's going to do this, that, or the other thing, it's nonsense. And is Bitcoin a tradable thing of something that you can do to trade, looking at the chart, looking at volatility, this, that, and the other? Yeah, have at it. Have fun with it. But is Bitcoin a good long-term asset? No, it's not. And hopefully I'm rubbing salt in Bitcoin holders' wounds. Hopefully they feel bad about it so they can get out of it right now if they are doing this for a long-term investment. If you're doing it for a short-term trade, that's different. Once again, I want to emphasize that. But if you're looking to buy and hold Bitcoin like you're looking to buy and hold, say, an Apple, a Google, or an S&P index fund, then I hope you feel bad. I hope this hurts you very bad, and I hope you get scared and get out right now. And it's for those reasons that I feel the way I feel. And that's what I'm seeing today, Mark.
So you think the levered Bitcoin sell-offs are accelerating the downside, sir?
I believe that is happening, and to some extent, yes.
Interesting. Yeah, you are seeing pretty, shall we say, aggressive levels to the dark side. You know, ETH now down to around 2,200. That's pretty much half of where it was, 4,500 not too long ago. Bitcoin threatening the 30K level again. So yeah, we are seeing some aggressive levels. If you want to dive deep into that a little bit later, listeners, join me in a little over an hour. We'll have the crypto rundown coming on live with some fun guests to break down all of that madness over there. Speaking of fun guests, I know we had mentioned and we had scheduled for Jim Carson to join us tomorrow on the Pro Q&A. He's kind of in a similar boat to Uncle Mike right now. He's kind of traveling. I think he might have a hard time making that prearranged time. So we may have to move him from tomorrow. So if you sent in questions already for tomorrow's Pro Q&A with Jem, we'll reschedule him for another time, probably maybe in a few weeks. So we'll get, I think we're already working on a great replacement for you for tomorrow. So don't worry, we'll have a great Pro Q&A for you. But we may have to rotate Jem back a couple weeks. If you still have questions you want for him, you can still send them in. We'll queue them up for when we get them back here soon. But I just wanted to let you know if you were banking on those, we'll get to that in a little bit here. Let's see who else we're going to get to. Let's go back out to the land of the lobster. Mr. Rock Lobster, sir. Volman firmly in the danger zone. I know you missed a lot of the logins on Fridays. I know you're very sad about it. If you want, maybe I can see if I can queue it up for you while you're talking. Will that make your life better, sir?
I've got so many multiple things going on, right? I did trades. I'm just trying to execute stuff, and I'm terribly sorry. This trading thing totally interrupts, messes up the show stuff.
Trading and shows don't always go well together. I've learned that, sir.
They do not, because especially when the vols is dumping like crazy from the top. I'm like, am I ever going to get out of anything? But I did get out of some stuff, so I'm happy. As far as this goes, I'll tell you what, the liquidity today has been really tough. So I don't know if anybody's tried to close trades. Not the easiest to close. The volatility has finally popped. I think the thing that kicked it over was, it started kind of Thursday after Biden's speech. I don't think that settled a lot of nerves. And just watch what the market did after it. He didn't take a rocket scientist. He just, he spoke on a Wednesday, and Thursday, Friday, Monday, not so good. So you have the Fed also coming in with, they've been talking tough with rates and tough with this, and I think they try to do a lot of setting the stage with, and I think getting stocks to sell off wasn't a terrible idea. And I think there's some opportunity now down here. So And I think we were down almost 3.5%. Now we're down 2%. So I think there's still volatility. It's not going away. But it's you have to see, like, this Ukraine thing now on the news. All of a sudden we're going to send troops to Europe. I thought we kind of elected Biden, so we didn't have to send troops anywhere. So there's, all I'd say is there's confusion, right? So anytime there's confusion, anytime there's uncertainty, anytime more of these things are piled on, also when there's uncertainty over a calendar date, like the Fed, you take that and you say, hey, so again, that's a recipe for vol going up. And the fact that they're really going to try to kind of, I would say, which I think is the right thing to do, they're trying to tamp down inflation and they have to make a stronger posture on it. It's the right thing to do. So the market's going to sell off. Now, how far that goes? Do we wipe out last year? Or do we wipe out of all of 2020? Possibly. Or 2021? Certainly a good part. And I think the big tech stocks have not sold off. So I think from that point of view, they've sold off, but they haven't given everything back yet. So, or they haven't given, let's say they haven't given back, they've given part of their gains back. But I'm just looking at some stuff like NVIDIA, right? Where I was laughing because I owned some 200 puts last week and I sold them, and now this week they would have really made some money. But even then, you look back at where these things have come from, and these stocks still have plenty of ways to fall versus the multiples that they had. Like they're crazy high priced. So what I would say is this is kind of what we have as a market. As far as like the vol is now higher because things are more volatile. And can we stay in this range in like zone 4? Remember the problem with zone 4, it just stays in this higher vol where we're just down 2%, up 3%. Like the swings can be crazy. So I would say is if you want to make longer term investments in some stocks at much lower prices with the vol this high, this is a good time. I don't think we have any kind of capitulation yet, whatever, when we say, oh, that's the bottom, and I definitely want to get on the bottom. But I think we're definitely in for vol ripping back and forth quite a bit for a while. So I would just say to listeners, don't forget that, you have but I wouldn't surprise me if VIX was higher at some point this week than it is right now today. So just take that with a grain of salt. And then I guess we can move along. But this, and we're now moving at like 3.5% a day. That's like a 45 vol. So I think VIX trading 35. It's all reasonably priced for the mayhem that is ensuing.
There is certainly some mayhem out there. And you're right. I mean, look, we get all, our knickers in a twist over this, but you're right. We're still at, almost 4,300 in the S&P. It doesn't seem like it was that long ago. We were debating, can the S&P break 4,000 to the upside and close through that? And so we still have a ways to go before we even break a level like that, let alone what we were talking about on our election night special, which also doesn't seem like it was that long ago, but now over a year ago, obviously, where we were flirting with 3,300 in the overnight levels there when it was back and forth, Trump, Biden. So, yeah, we're still, 1,000 points above that in the S&P. So there still is some wiggle room to the dark side if things do keep popping off, for all of our BTFD fans out there. Maybe you want to be a little cautious on that dip, because we've been dipping for a few days now. If you started buying last week, you've been catching the proverbial falling knife. A few other things to point out here is looking at some names, some data being crunched. Everyone's out there crunching the numbers on all these sell-offs right now. A third of S&P 500 stocks right now are more than 20% below their 52-week highs from last year. That includes names. We got Ford out there. Ford's off over almost 25% just in the past 5 days, off about 6 handles. They are now below. I remember I said they had a great open to the year. That first day of the trading year, they're up, 11%, 7%? You could have sold them, had a good year. You're below that level now. You're back down. They were in the 18 range. I think they're about to 19 again now. But Ford off, about 6 handles over the past 5 days. Of course, the news this morning, I think they've hit their max on how many lightnings. That's what I was kind of wondering. Everyone's all excited about the lightning, but how can they produce these things? And clearly they kind of ran into that ceiling now. They can't up, can't take any more orders. They can't produce anymore. So that's kind of what I expected. Let's see what we're seeing numbers that we expected. And in some degree, the numbers today are exactly what we would expect. And in other ways, they're blowing the doors off. We'll get to that in a second. First, let's start with the big indices. I can't remember, listeners, the last time. I have to go look. The last time we had an M handle in VIX this early in the day. It might be the mad. I don't think we hit it. We definitely didn't hit it on the Omicron sell-off on Black Friday because that was a half day and it was a thin market, so the volume wasn't there. Might be March of 2020. I'll have to go look and see. We have hit multiple M handles since the pandemic began, but they all were total and at the end of the day. We already, as we were a few minutes ago, we were already at 1.4 million contracts in VIX, listeners. That I need to go look again. It's been quite some time since we've seen anything like that on the VIX board. ADV ticking back up, go figure, up to 465. After today, it's probably going to be a wee bit higher. SPY, buckle in, listeners. 7.6 million contracts up already for SPY. The ADV 5.5 million. So yeah, that's going north too. These are some numbers, listeners. SPX kind of doesn't usually put on that much numbers. Day like today it does, though. 1.8 million already, listeners. 1.8 million in the S. That's more than double. That's close to 3x what we would see on a normal day like this already. So that's serious numbers. The ADV is a little bit shy of 1.6 million. And small caps, good old IWM, 1.2 million contracts on the tape right now. The ADV 790. They're all moving north after today, listeners. So major indices blowing the freaking doors off. Single names are also very active, but the names in the top 10, if you had just showed me this top 10 today and said, hey, take a guess, is this a wild rock'em sock'em day, or is it just kind of a normal day? I might just say this is our usual top 10 of any other day. The only real clue you have in here is that it cost you 307,000 contracts to break into the top 10. That's a sign that something is afoot. But outside of that, everything else is like any other day we might ever see, which is really weird and kind of disturbing me a little bit. Number 10 is NEO. Again, another name that's always in the top 10. 307,000 contracts. Number 9, SoFi. Again, a frequent offender right now there at number 9, 342. Number 8, AMC. Yeah, let's. I'm just curious now. Let's just pull up where the reigning king of the memes is hanging out right now. I got a feeling it's 1622. Off nearly $2 or almost 10% today. How those 145s looking in AMC right now. Number 7, good old Softy. They gave up a lot after that big deal last week was announced, and they got it all back. It's like they're giving it up again. They're back down. Let's go back a few days and see how they compare to the deal. Yeah, let's see. Yeah, okay, so they're below the deal at 286 right now, off 16% in the past month and 3% today. So yeah, giving up about a little over 9 handles, 287. Softy number 7, 408,000 contracts. Number 6, Palantir. Again, these are all kind of names that we've come to expect to be in the top 10 again. Palantir today off 6 1/3%, 1267. Listener, these are levels we have not seen in Palantir. My goodness, a year ago Palantir was $40, 1267 right now. These are levels we have not seen in Palantir since October 30th of 2020, listeners. That's kind of when it started kicking into high gear. In the beginning of 2021, meme stuff kicked off and Palantir kind of moved to another level. We are back below that again. Let's see. Palantir, like I said, number 6, 410,000 contracts. Number 5, again, AMD, nothing really startling here. 560,000 contracts. Number 4, NVIDIA, again, where it normally is, somewhere around number 4. AMD is usually around number 4, 5.2, 688,000. Number 3 is Ford, 795,000. Ford's kind of a perennial top 10er now, usually some days in the top 3. Like I said, it's getting the crap beat out of it today. Actually, it's rebounded about $1 from the lows. It got down, not quite 18.5. It got down to about 18, looks like 18.90 or so. Now it's up to about 19.50, so up about 60 cents. I thought it got a little lower intraday, but still taking quite the drubbing over the course of the past week, not even the past 5 trading days. And let's see, Ford good for 795,000 contracts right now. Number 2 is Tesla, 917,000. You don't need me to tell you Tesla's getting a wee bit beat up today. 890 right now, off 5.7% or about 54 handles. Let's see, looks like it got as low as about 857.5 or so, somewhere in that range. So again, it has rebounded substantially. off that. And again, that's number 2. You know what number 1 is, listeners? It's Apple doing kind of a daily normal 1.03 million contracts. Again, there's nothing here that's really showing me danger, Will Robinson, danger, outside of the 307,000 contracts for number 10. That's it. Everything else is, this could be your random Tuesday in July, and I would say sure. These numbers all look the same. 157.5 is where Apple is about right now, off about $5 or 3%. They got as low as, let's see, 154.87. So they sold off a wee bit now too, but still, let's see, how far back do we have to go to get back to these levels? We're back trading right now at levels that were pretty much mid-November of last year. So giving up all the latter portion of the year, but it's not like we're at apocalyptic levels in Apple right now either or anything like that. I mean, last June we were trading 125 in Apple. We're nowhere near that. So yeah, it's an active day. The indices are putting up numbers that look apocalyptic. If I saw those numbers, I'm like, oh man, something bad is popping off, and it's probably to the downside. If you look at the single names, I would not think that. Let's go out to the earnings. Obviously, sometimes earnings get lost in the shuffle in weeks like this, but there are big names popping off this week. We are in it, listeners. We are in earnings season, and lucky for you, we like you folks. So we have hot off the presses, brand new earnings move, earnings results, and earnings season reports for you folks over there, and maybe some earnings trades. I'll have to check for those too. Big names popping off this week: Halliburton, Philips, IBM, and of course everyone's favorite PetMeds today. Tomorrow we got J&J, GE, Verizon, Amex, 3M, and good old Softy. Wednesday we got Boeing, AT&T, NASDAQ, Abbott Labs, Tesla, you may have heard of that one, and Intel, my old stomping grounds there. Thursday, MasterCard, Mickey D's, JetBlue, Dow, Southwest, Apple, Robinhood, and Visa. Man, you do a lot of living just in Thursday. Look what a broad cross-section of our economy we have on Thursday. MasterCard, Mickey D's, JetBlue, Dow, Southwest, Apple, Robinhood, and you kind of touch on everything there. All you're missing is, I guess, a big retailer like a Walmart or something. Friday, Chevron and Caterpillar. We have some names already popping off before the bell today. We had PHG, that's Philips. They do all your TVs and whatnot. Let's see. They were before the bell today. They were at 33.12 going into their announcement. They were pricing in 4.2%. They delivered about 3.9%. So again, sometimes it's kind of hard to pull out what's going on with the market from what's going on with these individual names. But this one was pretty much in line. Let's see if I can pull it up really quickly right now and see where it's hanging out. See if we've seen some additional movement as a result. So no, actually it was at 31.82 when we ran the report. It's 31.74 now, so it hasn't really budged. So it's pretty much in line with its report. And then good old Halliburton. We all know energy's been very much in the crosshairs these days. Folks are looking keenly out there at Halliburton. 27.5 was where it was going into its announcement. It was pricing in nearly 5%. Get this, listeners, it moved 1%. It was at 27.5 going into its announcement. It was 27.25 when they ran the numbers this morning. It moved a whopping quarter. And in fact, it has given up a total of $0.50 now. So it's off 1.92%, but not even half of its straddle. Man, that's a whole lot of nothing we're seeing so far. And so far, the earnings reports have been updated to reflect that. We're at a total of 48 firms reporting now for week one, listeners. And we're back. Actually, we're back down from our mad level of 170, but we've also bounced off the low of 80. I think it was 82 or 80% last week, because now we're up to 113. So we are now net outperforming again. Will that maintain? Who knows? This season is insane already. It's just starting. But we have a lot of other macro factors that are going to contribute out here. But intriguing stuff. We have an updated earnings trades reports. Oh, looks like we got some calendars going up here. Got some long calendars, a whole bunch of them. 1, 2, 3, 4, 5, 6, 7 long calendars. And looks like IBM, Pets, a whole bunch of them out here. Verizon. So listeners, if you want to check out what some of the hot calendars are that Matt and his team think are interesting trades, earnings trades report, hot, fresh, and updated. And because we like you, all free, theoptionsinsider.com is the place to go to learn more. Really quickly, let's look up some names that are popping off right now. Coming up today after the bell. Yeah, we have a Pets calendar. Let's look at Pets really quickly. They're on the today after the bell. $24 is where they were trading. In the past, they've moved to $204. And right now, they're pricing in $239. So a little bit of extra juice. Is that merited? We shall see. GE, $96.30. In the past, they moved $460. Right now, they're pricing in about $520. So a little bit extra juice there. J&J tomorrow before the bell, right about $165 is where they were trading. They were pricing in $468. In the past, they moved $282. So a lot of extra juice there. Kind of hard to argue that isn't warranted. Microsoft, this one's been making a lot of headlines lately. 25th after the bell, 296 even is where they were trading. They were pricing in 1905. My goodness. In the past, they moved 685, listeners. You're talking almost 3x for that straddle. I think recent developments may be playing a role in that. Abbott Labs, 26 before the bell. 125.83 is where they were trading. They're pricing in 528. In the past, they've moved $3 even. So that's an interesting one. Boeing, our friends across the street, 26 before the bell. 205.5 is where they were trading. They're pricing in $11.10. In the past, they've moved $6.50. Wow, almost 2x there as well. Let's go really quickly. Oh, you may have heard of this one. What the old schoolers used to call telephone. 26.61 is where they were trading. They were pricing in $1.10. In the past, they moved 78 cents. Here's Tesla. There we go. They're on the 26 as well. 943.90 is where they were at this report. Obviously, they're a wee bit lower now. They were pricing in 89.25, listeners. In the past, they've moved 53.12. So, wow, almost a 2xer there as well. So, a lot of extra juice being priced in, listeners. Mickey D's, Love. I'll let you check all these for yourselves. But a lot of extra juice out there. Is it warranted? We shall see. We got to do one more really quickly. Apple, big name out there. 27th after the bell. 162.5 is where they were trading as of this report. They were pricing in about 8.25, listeners. In the past, they moved 570. So a whole heck of a lot of extra juice being priced in. Okay, I lied. One more because Rock Lobster loves this one. Hood. This is his new favorite holding. $13 when we ran this report. 210 was what they were pricing in. In the past, they moved 134. Now, the caveat, we don't have a lot of data points with Hood, but still, extra juice aplenty out there. Let's see what else is aplenty as we head on into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the odd block.
All right, let's get to it here. We're running long, listeners. We've been gassing on already here, and we're just getting into the odd block. Let's kick it off here with a newcomer, because it's one of those days. Newcomers are popping on the radar today. This is AMWL. This is a telemedicine company out of Boston. They connect doctors with patients virtually. And let's see, ticker symbol AMWL. Get it, AMWL? Right now, trading a whopping $4.23. This has not been a good year for them, listeners. This one looks like it got caught up pretty hard in the meme frenzy, because let's see, a year ago this thing was trading almost $40. It was trading $34, and by the time it was all said and done with the meme frenzy on January 27th, it topped out at almost 44. To talking almost 11x where it's trading right now. Now it's trading $4.21, and this thing has done pretty much nothing but go straight down. By the middle of not even June, by May, it was trading $10 again. So it had given up. It had gone from 44 to 10, and then just kept chugging away to the dark side the whole year, getting to where we are right now, 421. Let's see. Yeah, the low for the year came this morning, 371. So this thing has just been annihilated all year, listeners. But you know what? Someone thinks there's a little bit more to go, and they don't mind maybe picking up some at those levels if they do, and they're going to try to harvest some juice at the same time. Someone came out this morning, Mr. Rock Lobster, blasting away on the June 2.5 puts. 2.5. Gotta love that. So a whopping $1.70 below where the stock is trading right now. They still got 15 cents for these bad boys. That's a 75 vol, if you are wondering, listeners. They came in and crushed the bid 6,000 times. Then I guess they liked it so much they came and did another 4,400. So a total of over 10,000 on the day. Someone really wants to draw that line in the sand, Mr. Rock Lobster. There are earnings between now and June. Obviously, the date is March 23rd. So that may be adding to a little bit of that juice, but it's pretty far away from the earnings announcement. So intriguing stuff. Mr. Rock Lobster, what say you about this $2.50 line in the sand 10,000 times in your favorite new name, sir, AMWL?
It does appear that, let's see, we've got, let's see, there's 17,000 at 15 cents a piece. So is it in our, first off, the most important question to ask, is it in the Ferrari for the Girlfriend's dollar range? So yeah, let's say 17,000 times 100 times 15 cents. That is $255,000. Imagine that.
That's funny how that always works out.
It's funny, listeners, how that always works out. Now, how many have we profiled of these over the last couple of years? I think quite a few.
Oh, every day almost.
Yeah. So let's say, so you probably could, so I don't know who sells these, but I think whoever this person is one of the great juice sellers of all time. Because I think they've only really been dinged once that I can think of. Now,
you think it's one guy who has drawn all these lines in the sand over the last couple of years? He's just doing it all. He's just selling Ferraris left and right. I would love that. I would love to meet that guy. That would be interesting.
What's funny is I want him to call the show one day and say, all right, I am the line of the sand guy. I have 3 girlfriends, and they all have beautiful Ferraris.
You figured it out. I have 100 girlfriends, so I need to draw a lot of lines in the sand to get them all nice cars. And how did you figure out my MO, sir? How could you?
How could you? And I just divined it, I guess I just knew a lot of guys on the SIBO that did the same thing. So I'm actually just reinventing the wheel. I'm not making something up totally new. This one, again, it's the same MO, like stock at the bottom or, very, very low price. And they're like, okay, this is a stock I'll take down at this price. And but again, return on capital, all the same stuff. Is the actual numbers are fairly decent when you look at some of these line in the sand puts. Like, they are looking at 1 to 2% per month and trying to take stock at all-time lows, which is if you want to get long something, I find the best place to buy something is when it's at all-time lows because it has a much better chance of going higher. So I think today is it feels like one of those days. So we'll see what's going on. But I think that's what we got going on as of right now. So this is just standard line in the sand, right around a money. And on they go.
We'll keep an eye on these. Speaking of keeping an eye on things, this is a frequent offender who's back on our radar again today. Listen, it's COTY, everyone's favorite multinational beauty company, ticker symbol COTY. You don't need me to break it all down for you now. Yeah, we've talked about it many times on the show over the last 6 months. It's $8 right now, having a little bit of a sell-off today, off about almost 5%. It was almost 5%, rebounding a little bit. Got down to $7.75 earlier today. By the way, what Namer was talking about, AMWL, they sold those puts and the stock was $3.77. It was $4.20 now. So you're talking almost 50-cent rally just off the low on those bad boys. So interesting stuff there. But COTY hanging out off about 4.25% right now, $8 pretty much exactly. Someone may be thinking there's some near-term love to be had, that this sell-off is overdone, Mr. Rock Lobster, because someone came in this morning and started scooping 4,023 of the Feb 8/2 expiring on the 11th. So in the weeklies, not even a standard monthly. They paid through the offer 54.5 cents. They were offered at 53. They really like these. That was, let's see, the stock was exactly here, 801 when these went up. So the stock hasn't budged. That is a 102 vol, if you are wondering. Then they liked them so much they came in and did more and more and more to a total of about 12,000 when we kicked off the show. Maybe more have gone up since then. I don't know. But so 12,000, Mr. Rock Lobster, of the February 8/2 expiring on the 11th, all in that 55-cent range through the offer. Someone's got to have it, sir. What say you?
Well, Winnie, we have talked about this name. It's come back
many times, yes.
And they don't give up, with it. That's what when I look at this, I'm like, they just don't quite give up with it. Of course, you see something like Kohl Stores, right? I'm just looking at Peloton right now. It's up like $2 on a day when the market's just getting totally slammed. So I think anyway, what do we have? We have again, more. I think this is just more of the same, like call buying. I think they think it's a value play, but they just got to wait till it kind of gets to that price where they want it. So it's one of those stocks where I don't think these are bad call plays, but again, they're sort of waiting for the payout on this particular one. It's just, I don't think we've seen the COTY calls pay yet. While they have generated a lot of interest and a lot of open interest, like there's 47,000 open on the 9s, there is 20,000 open on the 10s. So, I mean, I mean, maybe this could happen at some point, but it has not materialized yet.
It has not. We'll keep an eye on this as we get into our last one here really quickly, listeners, because we're coming up against it here. Let's go out to CHEGG Inc. Talked about this before, but it's been a while. This is the digital and physical textbook rental company, ticker symbol CHEGG, CHGG. Let's see, trading about 25, almost $26 right now, $25.92, off about, about only a little over about 1.25% today, about 30 odd cents. A year ago, though, it was trading a lot higher. It was trading $100 a year ago, topped out at 115 in February 12th, and then it's just been annihilated since then down to where it is right now. 52-week low was probably today at 24.25. Yeah, that's pretty much today, almost. A little bit above that today, so not quite 52-week low, but almost today. Someone deciding, though, that there's more downside to be had. Someone gobbling up 4,000 of the April 20 puts, paying nearly $1 for these bad boys as well. So there's some juice to be had here. They pay. Let's see. That is, well, the stock was higher first off at 26.25. So these are probably not looking that great right now. That's a 74 vol, listeners. So that's a juicy amount of juice that they are paying for this thing to keep selling off through the 20 strike, and they're paying $1 for it. So it's got to get down to somewhere in the 19 range. Of course, we know if it sells off aggressively before then, it doesn't have to get to 19 to make some money on these bad boys. But still, intriguing stuff nonetheless. We'll keep an eye on these as well. So that's 3 more to be watched, adding to our column here, listeners. CHEGG puts, COTY calls, and AMWL line in the sand puts. Meanwhile, though, we got to keep on rolling. Uncle Mike's been waiting. He's beaming in from across the seas. We got to get to him. It is time for the strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the strategy block.
All right, everybody. Welcome to your weekly dose of option strategy. I think we can all use some of that today. So, Uncle Mike, what do you have in store for us today? I'm guessing it is a lengthy diatribe on why Bitcoin sucks, sir. Have at it.
All right. Bitcoin sucks, but no, just kidding. So today I want to just go through something as to what I've been doing the last couple of days, and that's rolling down put spreads. I've talked about this before on the show. Whenever you're selling a put spread and you're in a leveraged situation, I'm not talking about selling a put on a stock that you'd like to own and then just letting it get put to you. I'm not talking about that. I'm talking about if you're selling a put spread in a leveraged situation and it goes against you. Now, first off, selling a put spread when the market doesn't go down and goes up a little bit, you feel like a genius. It's a wonderful, awesome, super thing. It's easy money. How can anybody lose? Well, on weeks like last week, that's how people can lose. And so I have always talked about how I have 2 rules whenever I sell put spreads. Rule number 1, never let them go in the money. Rule number 2, don't forget rule number 1. And so when the market's negative on the year, my personal rule is that I allow myself to have very minimal exposure to it. The only thing that I had exposed to when the market went negative on the year was I had a leap out of the money call spread and a leap at the money put spread to where if the market were to go to 0, I think I'd lose like a few pennies or something very light like that. And so first thing is that when my clients are looking at that, because I've done a lot of switching from SPY to SPX over the course of the last year or so, you're probably seeing things in your account like, hey, I'm up $100. Oh, wait, now I'm down 50 grand. Oh, I'm up another 100, just because of the fact that these are pit traded products. So you don't get quite as quick of a real time quote as you would with SPY. But nonetheless, that's something to where at the end of the year, it's going to be minimal loss. But the other thing that I have that is the trade that I'm focused on is one to where I'm going roughly 2 to 3 months out. I can't give you exact strike prices or exact expirations. My compliance kind of frowns on that, but I'm selling put spreads a few months out. And by doing that, I'm not taking on a lot of gamma risk, meaning that if the stocks go down like they have, yes, of course, there's delta risk. And if it goes against me, it's going to bite. But what I'm able to do with it is I'm able to roll it down. And so what I've been doing with the SPX spreads is that I try not to let them get to within 100 points of the short strike price. When it does, I just roll down. And by doing that, I've done the math on this. So as of right now, I believe that if the short put spread that I'm in right now, if I just let it expire worthless, I won't. I'll get out of it when I get to my profit target if the market doesn't continue to free fall. But let's just say that I did and let it expire worthless. We could potentially have a 16% drop in the market. And this account, just with the put spreads, not talking about the crazy action on the longer term call spreads, but just the put spreads where the real risk is to the portfolio, we'd have a 16% drop in the market, and this would be down roughly 2%. And so by doing that, it's exciting from the standpoint that you can have that much of a discrepancy in where the market goes, and that's just due to risk management. So what I want to say with this is that whenever you're at a party and people start bragging about all the money that they made trading, a lot of times it may be true, but people don't typically tell you about the losses that they take. Honest traders or people who are legit brag about their losses. And right now I'm kind of bragging about this loss setup to where the market's going to have to go down over 16% from its high in order for this trade to have any significant loss from where I've been doing with this right now. Now, of course, if the market goes higher, I'll likely roll up and do some things to where we'll ultimately hopefully make money if it goes higher. But my point is that I am viewing this as a risk management market in that, yes, I am a perma bull, but no matter what you do, I don't care what strategy you do, even a perma bull like me, I always put risk management first. And because of that, that's how I've been able to, well, quite frankly, stay around for 20 years. And I think it's very important that you need to have a risk management strategy as well. And so what mine is that whenever I am selling put spreads and I'm in that trade, never let them go in the money. And in this case, because I'm just being super conservative, I'm not even letting them get to within 100 points of touching the short strike price. I might have rolled maybe a 10, 15 points later a couple times. The bottom line is that at that 100-point mark, that's my line in the sand. And when Bugs Bunny says, I dare you to step across this line, I'm Yosemite Sam, and I don't step across it, because if I step across it, I'll end up falling off a cliff, and that's the last thing that I want to do. So, moral of today's story, if you're selling put spreads, rule number 1, don't let them go in the money. Rule number 2, don't forget rule number 1.
Well said, sir, as we keep on rolling around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block. Obviously, a lot to keep an eye on this week. We got our friends, the Fed, popping back up on Wednesday. So if you want to check out what the market is pricing in, all the madness there, check out the CME Fed Watch tool. It's free, and it's pretty interesting stuff over there. In terms of what our audience is feeling right now, updated numbers on our poll, they're feeling 40 before 30 right now, even though we are maybe, at least for the time being, trending away from those. Like we're back to about a 35 or so in VIX land. That puts us at about 43% saying 40 before 30, 35, almost 36% saying 30 before 40, and around 21.5% saying, yeah, we're going to close somewhere in between those two this week. So intriguing stuff afoot here. Let's go around the horn. Let's go back to the rockingest of lobsters. Mr. Rock Lobster, sir, what are you keeping an eye on till we can gather here together on Thursday, sir?
Well, Thursday will be, hopefully I won't be so, I just came into Showtime, just run over with stuff to do. Actually, I think there's going to be a lot by Thursday. I think several things. How aggressive is the Fed? Are they going to pull back? Are they just going to keep the taper and then slowly raise rates? I think just them stopping the bond buying would be a good start. I think this aggressive rate thing was probably a little bit too much, but I think that also is the tough love the market needed. So it feels like we're waiting for that. So I think we'll get some information on that by Thursday for sure. It might look totally different by Thursday. We could have VIX up another 10 or down another 10. I honestly believe by Thursday when we have Showtime, once the Fed kind of, depending on what they say, if they walk back their comments a little bit. And then too, this like goofy Ukraine thing, so I think on the flip side, the only thing I'll say is the COVID stuff has been more positive globally. So, well, and again, it's not even on the front page anymore. That's all I'm saying. So it's a good tell.
Well, Let's go on out to the Uncleist of Mikes. Mr. Uncle Mike, sir, what are you keeping an eye on until Thursday?
Well, right now we're down roughly 10% off of our all-time highs in the S&P 500. Watching that number, of course, I think like the next stop, if you will, if we do continue to go down, is 4,000. It's kind of a round number, and then I think the stop below that, it's somewhere around the 3,700 level, and that's the close of 2020. So looking at those numbers, seeing if we touch them. But the other thing that I'm looking at is the S&P has rallied 100 points off of the low today, and it's still down 70 points. That's the kind of day we're having today. It is crazy. So watching that, and then, of course, just watching the Fed, watching the Russians, watching everything, and also watching how the 10-year note really hasn't moved that much today, considering we had that much of a downturn. That's what I'm watching.
All right, listeners, that music means we've come to the end of this show. If you're listening live, you're wondering what we're going to be doing for pro Q&As tomorrow. We have had to move Mr. Jem Carson down a couple of weeks. So he'll be coming back in a couple of weeks. But we got the once and future Dr. Vix, and indeed present, joining us tomorrow. I know a lot of you have VIX historical and pricing and seasonality, all sorts of fun questions when we're hovering at a 35 right now in the freaking VIX. So Dr. Vix will be there to answer all of your questions tomorrow. We'll send out an email with updated times and everything else, like if you haven't already received it there. And we'll get Jem rebooked for a later show coming up in a few weeks here. Speaking of what's coming up, let's go to the Uncleist of Mike. Mr. Uncle Mike, sir, if folks want to hit you up, assuming you're back here in the U.S. proper for Thursday's show and they want to talk to you about all these mad markets, where should they go? What should they do?
Follow me on Twitter at Mike TOSAW, TOSAW, or check out my website, stcharleswealth.com, if you're looking for a financial advisor who embraces the option product, if indeed it's appropriate for the client. Feel free to reach out. We'd love to have a conversation with you. There
you go. And we'll look forward to having you back in the good old U.S. of A soon, sir. And he's always in the U.S. of A, just on the far fringe of it. He is the Rock Lobster. Mr. Rock Lobster, folks want to hit you up to talk about, I don't know, your views on crypto maybe, as well as vol and everything else. Maybe they just want to talk directly to Vol Man. Where should they go? What should they do?
Go to optionpit.com. Check out any of my products. You get capital gains. Got some winners going over the last few months. Got Vol Trade Club, just closing another nice trade today. Trading Legion, closing another nice trade today. All kinds of stuff. If you want to learn how to trade this vol, be able to learn how to manipulate options and bend them to your will, come on over to Option Pit and we'll put some learning on you.
There you go. Put your learning on. We'll get some learning on soon here on the old Crypto Rundown. Got a seasoned hand at market making and vol joining me, our buddy Mr. Bill, coming up on the Crypto Rundown in about exactly an hour. He's been through a vol sell-off and a vol spike or two in his day, as well as all things crypto, so he'll have some good insight to share on what he's seeing out there in exactly an hour. If you're listening live, stay tuned. We'll pump some fun stuff in there. We'll be back again in exactly an hour to talk all things crypto. Tomorrow, I have the new time now. It is 2 p.m. for the once and future and indeed present Dr. Vix tomorrow, so join us for that pro Q&A session tomorrow. Get those questions in now. Who doesn't have a question about VIX and vol right now? Hit us up, let us know. It's probably going to be a pretty popular one. He hasn't joined us, I think, since episode 3, so it's been quite some time since we've had him in the hot seat, so take advantage of that. Back again on Wednesday, Options Bootcamp, Options Playbook Radio. Then back again on Thursday, another episode of the Option Block. We'll see you then.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.